Solana continues its upward trend. Today we're going to be breaking down some staking ideas and how this may affect the market. My name is Paul Barron. Welcome back into the show. Let's get started. I want to thank our sponsor, and that's Tangem. This is where you guys can get started in self-custody, and it's very easy to set up over there. This works like a little credit card with your phone and an app. And when you look at self-custody, many people think it's really complex and it's difficult to do. That is not the case at all. Literally, you can set this up like in 3 minutes. It's that simple. You guys can, of course, just use our link down below. It's going to give you a little bit of a discount to get going. Start your self-custody process because it is something I think that anybody in crypto should at least experience once or twice. Let's get into a few points on what we're going to be covering today. Some of this, of course, is around Marinade Finance. Marinade Finance, one of the leading stake controllers out there when it comes to Solana, as you can kind of see. And you also look at where the overall TVL has been going on Marinade as well for staking. This is getting into a very intriguing point. We could be at maybe a point where we could break out into another all-time high here, or at least when it comes to staking in general. One of the things we wanted to do today was bring on Hadley Stern. He was on our show once before. He's coming in, of course, from Marinade Finance. Hadley, how are you?
I'm doing awesome. Great to see you again, Paul. Thanks for having us on.
You bet. So let's get into it. We got to talk about a few things. I want to jump over to the topic of Robinhood first. Robinhood, of course, in Cannes announced they were doing ETH and SOL staking. That was pretty big news in general. How big a news is this right now for the industry?
I think it's big news. It continues the narrative that we're seeing with the continued adoption and interest by investors for Solana. And of course, with Solana, if you're an investor, staking is kind of a must-have because you're, unlike ETH, where you're maybe walking away from 2 or 3% returns, on Solana, you're in the 7 to 11% range. So I think it's a very good sign for Solana in the ecosystem. Of course, we want to see as one of the leading staking providers for Solana, we're a Solana only company. Anything that helps with the adoption and getting Solana in front of people is a very good thing, especially in the context of some of the other interesting moves that Robinhood is making in terms of really taking blockchain technology very seriously.
I was looking at your website, Solana ETF filing with staking.
Yeah.
This could become something really big. First of all, what's the roadmap for something like this right now?
Sure. So, and I was actually down in DC earlier this week with the Proof of Stake Alliance meeting with Treasury. There's some specific taxation issues that are really important for the ETP and ETF manufacturers. I would say sunny day scenario, we'll see staking ETFs in market in the October-November timeframe. I think a more negative case scenario is Q1 next year, but things are trending towards that October-November timeframe. The SEC came out with some guidance about 4 weeks ago relative to staking, particularly saying that native staking in particular is good for ETFs, which actually fits in with our strategy and posture that native staking is better for the ETF investor than liquid staking. Even though we have mSOL, we have a big native staking business. So everything seems to be lining up, and I think we're going to get there within that time frame.
Well, you guys being the first and the exclusive staking provider here, at least in the US, that's a pretty big deal.
So let's break down the Solana staking or the Solana ETF. There's about 6 to 8 to 9 providers who are in various conversations with the SEC and have various applications. We are one of them. We partnered up with Canary, and we have the Marinade Solana ETF that is an application. We're also in conversations with other ETF providers about supporting them with our product as well. So it's a very dynamic piece. So one question that's out there, you saw this kind of strange thing with the whole Bitcoin ETF. I would call it debacle. I think it's fair to say, where it was 0 to 10 years for approval, and the SEC just approved everyone at the same time.
Right.
So you had Grayscale that basically carried the industry with their litigation against the SEC. In a way, get punished, or certainly not rewarded for all those years of work, with new entrants like BlackRock being approved the same day, having that brand recognition and being able to grab market share. Some of the ETF providers in the Solana staking ecosystem are asking the SEC to do more kind of a by who applied when and roll those ETFs out in sequence. So we don't know yet, but there is a scenario where we wake up one day in October And lo and behold, there's 6 Solana staking ETFs all in market, all that have basically a similar product, but maybe different fees. The other thing that we're very focused on, and I think we were going to talk about this, so I'll just bring this up, is Marinade Select.
Hmm.
And the reason why we're very focused on that is we are concerned that we are at a centralization moment for Solana. And so, what do I
Interesting.
mean by that? If we look at the Bitcoin ETFs, 6% of Bitcoin is now tied up in ETFs. Almost all of them are with one custodian, Coinbase. Let's say it's basically 5% of Bitcoin just on the ETF side is with Coinbase. What does that mean? And that's where we're concerned, where there are some great companies and we're in co-opetition with many of them. And when they sell to ETFs, they sell one validator, one
Right.
private instance. So what if Solana, suddenly 5% of Solana is tied up with only one validator, or 10% of Solana? What does that
Yep.
mean for the ecosystem? So that's why we created Select, which is a pool of 30 validators, all institutional grade. And that's what the Canary ETF is going to be, and that's what we're working with other ETF providers on as well.
You guys, of course, are also going in with earning Bitcoin while staking Sol. We talked about this before the show. Explain to me a little bit about this, because this was surprising to me that you would have so many options available here. Give me more info on this.
Yeah, so we're piloting a program called Appropriately Marinade Recipes. Some of the feedback was, well, I'd like to stake Sol, but I'd like to receive USDC into my wallet, which is kind of
Hmm.
reasonable. But then we had some other users say, well, I'd like to stake Solana and receive Bitcoin as my staking rewards. So we're developing and piloting something called Recipes, where the idea is that you'll be able to come in as a user and self-select your own recipe. I want to stake Solana. I want to receive half in Bitcoin, half in USDC, hit stake, and then you're good to go. And the reward, instead of being paid out on Solana every Solana epoch, which is 48 hours, you'd supply a Bitcoin wallet address, and your equivalent reward would get sent there. So
Okay.
this is about taking the advantage of DeFi, right? This is how DeFi should work. We shouldn't.
Hmm.
These are protocol to protocol movements. They shouldn't be complicated. It's programmable. It's programmable money, and this is just based on customer feedback. So that means we're looking to roll this out in the next couple of months.
Okay.
We have some partnerships lined up with some Bitcoin providers in terms of which Bitcoin we would use. And then we've also talking to the institutional market as well. I think this actually, even though this is much further off from a regulatory standpoint, but it also gets into the ETF market. Why can't I hold a Solana ETF and get my staking reward in Bitcoin, maybe to my
Yeah.
Bitcoin ETF? Now, I'm not going to go into the SEC and talk about that tomorrow because we've got other things to deal with first. But this gets back to DeFi, right? Why are
Yeah.
dividends only paid out in the stock you own? What if I own GE and I
Hmm.
want the dividend in Tesla stock? Well, it's programmable money, right?
Will X stocks have exposure to this as well? If you look at
Yeah,
where this is going.
yeah, absolutely. And there's some conversations going on there. There's some regulatory questions. X stocks is blocked in the US, but we do
Hmm.
business a lot outside the US. But yes, why should you not be able to stake Solana and earn Apple stock?
For some of our audience, X stocks basically being a way to trade stocks. You could go out and buy on the open market a Tesla stock, an X Tesla stock, even though that's not holding a share of Tesla, but you'd be able to trade and be able to earn revenue against it. So there's some interesting points that you're getting to within this. Let's talk about the current market structure bill, because this is crypto week as we record this. Obviously, the Genius Act, the anti-CBDC, and the market structure all coming to a head at once. First of all, what's your opinion on whether or not market structure will make its way through the Clarity Act, make its way through Congress?
I'm an optimistic person by nature, so maybe you won't get a realistic answer. I think it's going to happen. There's tremendous alignment of incentives
Yep.
from the industry players. There's incredible engagement from this administration. Now, I've been in this space since almost, well, I think it's 11 years now. I started first at Fidelity, and the conversation level and sophistication that's gone in DC is transformative. So I think we're going to see something happen, but there are definitely going to be bumps along the way. And I think we saw that a little bit this week with some
Yeah.
questions around CBDCs and those types of things, which I think are healthy conversations to be had. Everyone is incented to do it now ahead of, the midterms next year. And
Yeah.
so for that reason, I think we're going to be in good shape. Is everyone going to get what they want? No, but I think we're in good shape.
Let's talk about treasury companies in general, because this is a strategy that we've seen deployed now within Wall Street. A lot of this happening within the Bitcoin ecosystem, but now Ethereum starting to also go in this direction as well. A lot of publicly traded companies holding treasuries. What about Solana? What do you see around treasury companies? I'm on your website right here. Why would not these treasury companies use Marinade?
First of all, let's step up to the Solana piece. So there's already Solana Treasury companies. There's Sol Strategies. There's
Hmm.
DFDI that's NASDAQ listed. We're in collaboration and conversation with a lot of them. In terms of the question of why they wouldn't use Marinade, they may, but a lot of what they're doing is buying Solana and building their own validator infrastructure.
Okay.
And so there's some co-opetition questions there. But we're absolutely seeing the trend of treasury companies expand to Solana. I would expect to see that trend continue. I have kind of a negative view on treasury companies. I find them interesting, curious. I'm a little suspicious of the NAV differential and the premium and what that does to the end investor.
Hmm.
I'm also a little curious as to, are they just filling a gap in the market temporarily, especially for Solana where there's no ETF? It's a great way. It's kind of like GBTC back in the day with Grayscale, where there was no
Right.
Bitcoin ETF, but I could buy GBTC, and I could close my eyes on the NAV differential. I do have some concerns around what a flameout would look like if the NAV ever compresses and what that's going to do to the end investor.
Well, let's talk about that, flameouts that could occur, because this is something that I think many people are concerned with. There's two types of treasury companies, one that is just simply holding the asset or acquiring
Yeah.
the asset. And then there are those who are acting as validators, have infrastructure, other products and services. What about those kinds versus an asset-based only when you look at the treasury
I,
models?
Yeah, I prefer those kinds. Like I have a lot of respect for the Sol Strategies and DI teams. I think they have Solana's interests in mind. They're looking to help support the ecosystem, even though I still have some questions.
I want to look at Marinade Sol right here versus Jito, Jupe Sol, etc.
Mm.
Do you think the market dynamics are going to be changing soon? Where do you see this heading?
Jito has done a fabulous job building off their largely their MEV-based business. I think we've passed half of our almost half of our TVL now coming from native staking, which won't be reflected in those charts. So we started
Okay.
with mSOL. We were the first liquid staking token. But now for the institutional market, we're laser focused on native staking. We fundamentally believe it's better for ETFs, it's better for institutional investors. There's no smart contract risk. In Solana, there's this very neat part of the protocol where if you stake natively, you retain control of your keys, which is really important. 90% of Solana is staked natively. So even if you look at that, if you bring up that chart again, you're only showing 10% of the staking
Yeah.
market. So native really is the big story in Solana staking versus liquid.
Yeah. So this is the native. I think this is the one stake over time. Yeah. Okay. Here we are. Liquid versus native. So is this what you're talking
Yeah.
about in terms of growth? Okay. All right. What does this look like long term?
And long term in terms of
Like think of it
returns, how
this time
so?
next year, in terms of adoption rate,
Yeah.
what we might see in the
Yeah.
markets out there.
Great question. So I think this time next year, the Solana ETFs will be live and in production. And I'm not sure. I think we'll see something like between ETH and Bitcoin level adoption. ETH has been a little slower. I think part of that is because Bitcoin has so much mind share, and also the current ETFs, ETH ETFs don't have staking. So I'm actually very bullish on Solana launching out of the gate with ETFs. Solana has been getting a lot of usage from institutions, real world use cases. It's, I believe, the most used chain in terms of fees across all the L1s and L2s. So I think this time next year, we'll see even more Solana price growth and
Okay.
substantially more staking on Solana.
Well, that's good news, I think, for Solana holders, but in general, I think the ecosystem as a whole. I'm looking at your native staking, and I want to just kind of think about native versus liquid staking. Do you feel like liquid staking is going to continue to accelerate? Do you think native staking is going to take over? What are your thoughts between the two in terms of the options that investors would take? And I'm looking at max yield versus select. There's a big difference here.
Yeah. Yeah,
So,
there is. So yeah, max yield is our model. So we're unique. We don't run any validators ourselves, and we're a marketplace of validators. One of our marketplaces is the broad one, where hundreds of validators come in, connect to us through a command line interface, and bid through a stake auction marketplace to receive stake. That's the highest yield.
mhm.
Not appropriate for the ETF market because those validators don't go through a strict contracting and KYC process. So that's why you have the Select that has a slightly lower APY, but has some other benefits. In terms of where I see this breaking out, native staking will continue to be the dominant staking vehicle on Solana. Unlike Ethereum, where you're dealing with a week or more to unbond or unstake, with Solana, it's 48 hours. We're also introducing an instant unstake vehicle. That's actually live today in production, and it's not Marinade specific. You can use it to unstake from any validator. And in that model, an ETF at the end of the day can redeem Solana for their staked position, instant unstake with a
Yeah,
RFQ marketplace.
I'm looking
So
at that on your
that really
website.
obviates the need for mSOL.
This has happened now. You said this is live available today?
It is,
Native
yes,
instant?
instant
Okay.
unstake in alpha. You can use it, but not for institutional level liquidity.
Okay, that's interesting because this could really change the game. I think, especially if you look at what Robinhood is trying to do. Why wouldn't Robinhood just use Marinade instead?
Well, yeah, Robinhood should use Marinade. If you want to join our business development team, I think you're doing an excellent job, Paul.
Well, I mean, native
So
unstake would be just let's just do it. That's a great
yeah,
feature.
so
Why not?
yeah, so they will be able to use instant unstake with actually out being a Marinade customer. So we're making instant. One of the places we operate, we're a 30-person shop that's only Solana staking. So
Okay.
I like to say we're very good in technical conversations, a little boring at cocktail parties. So we're able to develop things like instant unstake that Robinhood should and probably will use when it's ready for their scale in production.
All right. Well, listen, we've got to get into a couple more things here. I think I had a couple more questions in reference to explaining the network. What do you guys take into consideration on this, et cetera?
Sure. So what you're seeing here is on our site, largely related to the Nakamoto coefficient.
Mm-hmm.
And so this is showing the live leaders, the largest validators. So you see there
Yep.
Helios, then Binance, then Figment. So again, even though we have almost 12 million SOL on our platform, we don't show up here because we're not an individual validator. So this is really breaking down when I talked about the origins of Marinade being focused on Solana decentralization, this is telling the story, communicating the metrics around how we're doing from a decentralization standpoint,
Yeah.
which is much better than we were 4 years ago, to say the least. There's still some challenges, but we make this data available to end users to see the health of the Solana network transparently.
Yeah. All right. So in terms of getting out there, anything for this Seeker launch that's happening on Solana within the Solana ecosystem, their mobile device, you guys planning anything to possibly capitalize on what would happen when that phone launches? A lot of people are looking at airdrops, all sorts of things.
Don't have anything to announce yet, but we're looking at it very closely. I have my Seeker on order,
There you
so
go.
looking forward to receiving it, but nothing to announce at this point.
Well, it's coming out in August, so it's getting short.
Yeah, I think it's soon.
Starts
I
next
had to
month. Yeah.
confirm my shipping address. So
There you go. That's true.
yeah.
Everybody's all right, Hadley. Last question for you. Obviously, everybody wants to know Solana's price. We don't do price predictions, but do you think we'll see an all-time high again on Solana?
It's been interesting to track, Bitcoin all-time highs and so-called alt season, lagging a little behind that if we look. I'd much rather focus on business results and then assume that price follows. I think the question
Right.
for chains like Solana is, are people using it? Are they using it for real world applications and real business applications? And I think, whether it's with Helium on the mobile side, whether it's real world assets being issued on chain, in the security space, all the DeFi use cases, all the chain and fee activity, the numbers
Mm-hmm.
for Solana are strong and growing. So
Yep.
then I would extrapolate from that what will happen with the price.
Well, there you go. I think what you're saying is yes. We're going to see some big
I'm
price
saying
action.
yes, without doing price prediction. You know, I'm
Yeah,
not just saying
exactly.
yes, it's going to hit there, but trying to uncover,
Yeah,
the
well,
reasons
sure.
behind it.
You got to look at the
Yeah.
fundamentals here, which are very strong within it. And I think the staking component maybe was revealed to a lot of new investors for the first time, because now they're starting to see staking yields inside their Robinhood accounts. And for
Yeah.
traditional investors, they're not used to those kind of things. They're used to dividends, but not used to that.
Yeah.
So I think the eyes
Which is
will
really
start to.
interesting because a lot of the conversation we have with the SEC is that this isn't a dividend, this isn't a lending thing. The reward is an outcome of a protocol level activity.
Exactly.
And
Yeah.
we can't manipulate it, by the way. It's set by the blockchain. There's certain
Mhm.
things, you can run a validator more efficiently, but there's no manipulation. So
Exactly.
I like the way you characterize it.
Yeah, and I think it's what is opening up a lot of investors' minds to where digital assets are going into, because everybody understands that when it comes to long-term investing, those things kind of play out, especially if you're getting the asset back in SOL, so it's compounding. That's the beautiful
Yeah,
thing about staking. So anyway, Hadley, it's been great having you on again. Thank you so much for coming in. We appreciate it.
always a pleasure, Paul. Thank you.
You bet. All right, you guys, if you're not in our own Diamond Circle, you should be. It's our own private group. We always leave a link down below in the videos so you guys can join. It's absolutely free. And if you're not following me on X, make sure and do that as well. It's just @Paul Barron, and I'll catch you next time right here on the Paul Barron Show. See ya.